They laughed when this stock was trading under $8. But what if I told you the story unfolding right now with Opendoor could be one of the biggest turnarounds in real estate tech, and hardly anyone is paying attention? Because while everyone's chasing AI stocks, semiconductor hype, and meme trades, something quietly strategic is happening behind the scenes here. Big money's moving, algorithms are manipulating, and retail investors are missing it completely. So if you're holding, watching, or just curious whether this stock still has a shot to break above $10 again, don't blink. Because this is not just about today's price movement. It's about what's really going on under the hood. Right now, Opendoor, ticker symbol OPEN, is trading around $7.45, down about 1.7% for the day. The low touched $7.33, the high was $7.79. But here's where it gets interesting. Volume is way down. Only about 73 million shares traded compared to an average of over 300 million. That's a major slowdown. When you see volume collapse like that, it usually means institutions are holding back, waiting for a catalyst, while algorithms keep prices in check. And that's exactly what we're seeing here. In pre-market trading, Opendoor actually looked strong. It tried to join the broader tech rally after that blockbuster deal between Broadcom and OpenAI sent a shockwave through the market. But Opendoor didn't follow. Because Wall Street doesn't see this as an AI play, at least not yet. That might change soon. Morgan, the new chief growth officer at Opendoor, recently tweeted, "Day zero, let's roll." It didn't go viral, but it's a sign. There are changes coming, possibly major ones. If Opendoor starts leaning into automation, AI-driven home valuations, or next-gen analytics, then the market might finally start assigning it an AI multiple. But right now, we're still in speculation mode. No new SEC filings, no press releases, no new coverage. Just silence. And silence in the stock market usually leads to one thing: manipulation. When the market opened today, Opendoor got hit instantly. That's not retail. That's institutional positioning. Options data shows around $17 million in calls and about 4.7 million in puts, with over half of the total flow being bearish. And most of those trades happened in the first 15 minutes of the session. That's coordinated. That's algorithmic. But while the surface looks bearish, dig deeper and you see something different. In the secondary market, big money is still quietly buying. Dark pool data shows multiple large block trades, 1.5 million, 1.1, 1.07, all institutional size. Not a flood, but enough to tell you one thing: the smart money hasn't left. So why isn't the stock moving up? Because the spotlight's on AI and semiconductors. When everyone's staring at Broadcom and NVIDIA, stocks like Opendoor get ignored. And that's exactly where opportunity hides. Right now, Opendoor is sitting between its pivot and S1 level, around $7.65 being a key price to hold. If it stays above that, bulls can relax. If it drops below $7.07, that's where the bears could take short-term control. Technically, it's sitting below the 10-day moving average, showing short-term weakness. But the stochastic RSI is oversold, meaning the stock's due for a bounce. It just needs a spark. That spark could be anything: a new product announcement, an AI integration teaser, or even a positive macro headline. And with how reactive momentum stocks are, even a small catalyst could trigger a sharp reversal. Options data shows strong resistance at 880. If Opendoor breaks through that with real volume, the next stop could easily be 950 or higher. But without news, it'll likely keep consolidating between 7 and 8 until traders get a reason to move. The real problem? Lack of media attention. No fresh articles, no analyst upgrades, no hype, and for a momentum-driven stock, that's dangerous. Momentum needs oxygen, and right now the story's gasping for air. But when you look at sentiment, retail's out, institutions are hedging, and algos are suppressing, it starts to look like a setup. A quiet setup, the kind that often leads to explosive moves later. If Opendoor can hold its current levels, attract capital, and deliver one solid headline, this could shift fast, especially if Jerome Powell and the Fed talk about rate cuts this week. Because lower borrowing costs mean more home transactions, and that's Opendoor's entire business model. So here's the bottom line. Right now, Opendoor is quiet, too quiet. There's accumulation, low volume, and no hype, the classic ingredients before a potential breakout. The stock might look weak on the surface, but smart money doesn't chase green candles. It builds positions when everyone else is bored. So, what do you think? Are you buying, holding, or just waiting for confirmation? Drop your thoughts below. I'm curious how you're reading this one. Because when the crowd stops paying attention, that's usually when opportunity knocks. And if Opendoor's next move really does include automation or AI-driven housing analytics, then prices under $8 might look cheap in hindsight. Stay patient, stay alert, and don't underestimate quiet stocks. Sometimes they make the loudest comebacks. Disclaimer: this video is for entertainment and informational purposes only. It should not be considered financial advice. I'm not a financial advisor, and you should always do your own research or consult a professional before making any investment decisions. All opinions expressed here are personal views based on publicly available information. Investing involves risk, including potential loss of capital.